Insurance. It's meant to protect us. But what if I told you that the very industry designed to shield you is also hiding secrets that could cost you? Most of us think we're paying for safety and security, but in reality, the insurance world is full of loopholes and hidden traps that could cost you more than you expect. Today, we're going to expose some of the secrets that the insurance industry doesn't want you to know, and how you can make sure you're not getting shortchanged. 1. How insurance companies make money. It's no secret that insurance is a massive business. The U.S. insurance industry alone generated nearly $1.3 trillion in premiums in 2024. But how do they make money? Well, the most obvious source is premium payments. That's the money you pay every month or year. But here's where it gets interesting. Insurance companies don't just sit on your premiums. They invest that money in the stock market, real estate, bonds, and other assets. Essentially, the more premiums they collect, the more money they make, even before they pay out any claims. And what happens when you need to file a claim? Sometimes, you'll find that they're reluctant to pay you the full amount you deserve. 2. The underwriting game. Who decides your rates? Most people think that insurance rates are determined by their driving record or their health history. While these are factors, there's much more that insurers look at to determine your premiums. You might be shocked to learn that your credit score is one of the most important factors in determining your rate. If your credit score is on the lower end, you could be charged up to 40% more for car or home insurance, even if you've never made a claim. But that's not all. Your occupation, your zip code, and even your hobbies can influence how much you pay. Insurers rely on algorithms that use this data to assess how risky you are as a customer. So if you live in a high-crime neighborhood or work in a high-risk job, you might find yourself paying a lot more, even if your actual claims history is spotless. It's a data-driven system that rewards the insurer, not necessarily the customer. 3. The claims maze. Getting paid is harder than you think. We all know that filing a claim should be easy, right? After all, you've been paying your premiums, so why shouldn't the insurance company cover your costs when something goes wrong? Here's the kicker. 1 in 5 claims is denied. Insurers have teams of adjusters whose job is to find reasons to deny your claim or offer you as little money as possible. You may find that your policy is full of exclusions you didn't know about, or you'll get a lowball settlement offer that barely covers your damages. In some cases, it can feel like the insurance company is working against you. When you need them most, they may find loopholes in your policy or argue that the damage isn't covered. For instance, many homeowners insurance policies don't cover damage from flooding or earthquakes, unless you've specifically added that coverage, which costs extra. So even though you may think you're fully covered, you're not. 4. The fine print. Hidden fees and exclusions. Speaking of exclusions, let's talk about the fine print. Most people don't bother reading it, but if you don't, you might be paying for coverage you don't even need, while missing out on things you thought were included. Let's say you've purchased auto insurance for your vehicle. What if I told you that many policies have high deductibles or percentage-based deductibles, which can add up to more than you expect when you actually need to use the insurance? Or that administrative fees could be tacked onto your bill for things like making a policy change or even just issuing a new insurance card. And, of course, exclusions. You might think you're covered for certain types of damage, like vandalism or fire, but when you check the fine print, you'll find exclusions that limit coverage in certain situations. Natural disasters, like hurricanes or floods, aren't always covered unless you specifically add that to your policy, and that costs more money. It's a classic tactic to boost their profits while leaving you vulnerable in an emergency. 5. The loyalty penalty. Why staying loyal can cost you more. Here's something you probably didn't know. Loyalty can hurt you. Insurance companies often offer new customers cheaper rates to get them to sign up. But what about you, the longtime customer? Well, When your policy comes up for renewal, many insurers raise your premium. This is known as the loyalty penalty. The longer you've been with your insurance company, the more likely you are to see an increase, even if you haven't made a single claim. In fact, the average renewal price for long-term customers can be up to 10% higher than what a new customer would pay for the same policy. So, even though you've been loyal, you could be paying more just for staying with the same company. The reason? Insurance companies know most people won't shop around, so they raise your premiums knowing you'll just accept the increase and keep paying. 6. The data dilemma. Is your personal data safe? Insurance companies are getting smarter about how they use your data. Today, many companies are relying on AI and big data to determine how much to charge you. While this can mean more personalized rates, it also introduces new risks. Insurers are using everything from social media profiles to your shopping habits to gauge how risky you are as a customer. Your zip code, job, and even your online activity can be used to set your premiums, whether you like it or not. The problem is, you have no idea how these algorithms work. You can't see how they're making their decisions, and that leaves you vulnerable to potential biases. In fact, many of these algorithms can discriminate based on factors like geography or occupation. This means you could end up paying more simply because of where you live, your job, or your lifestyle, even if you have a perfect driving record or healthy habits.
7. Global trends. How the rest of the world is affected.
If you think this is just a problem in the US, think again. Globally, the insurance industry is thriving, and the tactics we've discussed are being used all over the world. For example, Ping An Insurance in China reported a 48% increase in profits in 2024. Meanwhile, insurers in other countries like Ireland, Germany, and Australia are seeing profits soar. But despite these massive profits, consumers worldwide are still paying more for the same or even worse coverage. So, what can you do about it? The first step is knowledge. Read your policy carefully. Understand what's covered and what's not. Don't assume everything is included. Take the time to ask your insurer about exclusions, deductibles, and hidden fees. Next, shop around. Don't just accept your insurer's renewal rate. Compare prices from other companies to make sure you're getting the best deal. Don't be afraid to switch providers. You can save hundreds or even thousands by finding a better deal. Finally, don't let loyalty blind you. If you've been with the same insurer for years, you might be paying too much. Shop around every year to see if you can get a better deal. If you don't, the insurance company will continue to raise your premiums, and you'll end up paying more over time. Knowledge is power. By staying informed about these industry secrets, you can avoid overpaying for insurance and ensure that you're getting the coverage you need at a price you can afford. Stay smart, stay protected, and don't let the fine print catch you off guard. For more content like this, make sure to subscribe to our channel and hit the bell icon for notifications. Thanks for watching.